Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the Australian dollar was full of bullish charm as the bulls climbed out of the bearish trenches and managed to squeeze up towards a high of 71.02 overnight. Now, from the technical implications, I would say the market is probably caught a little bit short due to the fact that the dollar index took a slight swing to the downside. Nevertheless, with the resistance now taken out at 90.95, which was my objective to the last sell-off, the fact is that we could see a little bit of a squeeze up towards 71.55.65. Now, overnight in Washington, President Donald Trump repeated his threat to impose tariffs on $267 billion worth of additional Chinese imports if China retaliates for the new levies. President Trump suggested that he was absolutely ready to take additional steps against China in case of retaliation. China wants to make a deal, and I say that they're not ready yet, Trump told reporters in the Oval House. We've cancelled a couple of meetings because I say they're not ready to make a deal. He added that the current U.S. trade imbalance with China means that they already retaliated. So with the dollar index taking a bit of a slip overnight, and with China and the U.S. trade tensions possibly being reignited, could put a bear face back into the U.S. to Australian dollar. Therefore, I would look towards 71.25 to 71.55.65 as an opportunity to sell this market, because I believe we will get a move up towards this region and then plummet back to the downside, which gives us a target still of 70.20.30. A little bit of a concern now comes to the euro. First of all, we have a dragonfly doji. Now, this is bullish. Along with that, we do have some bullish divergence coming into the market. Therefore, could see a bit more of a play to the upside. But at the moment, resistance is seen at 115.65.80 and reassessed from there. Now, overnight, the dollar index bulls for the fifth attempt on 95.65 resistance failed after the market did post a high of 95.82, was rejected and plummeted to a low of 95.30. Now, to the vital piece to the upside is that level of 95.65. It does need to be cleared to get the move up towards 96.80.85. In light of the current pattern, we could see supply expected to come through from the challenge of 115.65 to 80, and as long as we maintain under there, then I'm quite comfortable to say to hold shorts. Now, with the divergence clearly being seen here, do place stop losses accordingly to your risk management or above 116 figure for myself, and see how the day plays out. Looking on to the dollar yen case, the market is still very much bearish, and I expect to see a flow of supply coming back into the market and look towards the region of 112.60.75, with the MACD and the RSI back in the marriage to support a bear case. Could see a move beyond below 112.60 down towards 112.10 to 111.45 as an objective. Resistance on the day seen at 113.65. Well, the pound has taken out the top side and now does question whether the bulls have got the play in motion. It does suggest, though, the break of 131.30 could see exposure up towards 131.85.95 to 132.60.80. Do be on your guard, though, that I do expect any kind of negative outcome from the UK Brexit announcement that's coming up very soon would give another splurge to the downside, and still with the safety net holding around 128.40.80. So if you are short, I will place stops probably around or above 131.76 to 131.95 to the figure, just in case we do get a squeeze up and it's not comfortable for those that are short if we see a bit more of a push to 132.60.80. So keep on your guard. No real targets at the moment for the gold, as it still continues sideways in this 1,176 to 1,212. At the moment, though, we are seeing a bit of a breakdown since the recent sell-off, and still looking towards 1,176 to 78 as a buy zone. A little more to say to that. Well, there is a bit of concern now with the market in oil purely for the fact is that there's storm fears, and along with that showing Iran crude exports down by more than half before the sanctions commence next month. Companies operating in the Gulf shut down nearly 20% of their oil productions as Hurricane Michael approached the region, where it was expected to make a landfall on Wednesday as a Category 3 storm. According to forecasts by various weather services, Michael could deliver the most powerful strike in at least a decade on the Panhandle, a 200-mile strip on northwest Florida that homes the state's largest crude and natural gas fields. The Panhandle previously took direct hits from Hurricane Ivan in 2004 and Hurricane Dennis in 2005. However, recent news reports suggest the hurricane track would mainly avoid major oil-producing assets in the Gulf, although a change in the path could widen its impact. Along with that, on Iran, recent data showed that the export of 1.1 million barrels per day is the first week of October down by 2.5 million barrels in April. So keep an eye on this, as it could put a bit of a squeeze on the market. Now, we did get a challenge to the downside of this 73.5, but didn't break. At present, though, still be on your guard. This MACD is breaking down. So therefore, I would not discount another challenge of 73.5. If so, a break beneath there would expose the region of 71 to 70 at 1.5 as a direct objective. We did get a break of 73.5, but we need a close under there to support this view. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.